Everyone, welcome back to a new post today. Let's continue with the most important topics you need to keep track for October 24th, and the very first is about many issues with regard to the Supreme Court pronouncing its decisions. The first is about a 9-judge bench which the Supreme Court upheld the right of the states to impose taxes on industrial alcohol. What exactly is industrial alcohol? And this case is very special because it clearly interpreted the provisions of the 7th schedule of the Constitution with regard to the union list and the state list as well. It has also added a power to the state now where the state can garner more income by imposing taxes on industrial alcohol. So the question before the Supreme Court was whether the states can regulate industrial alcohol or whether the centre had exclusive control on the subject. Now the centre says it roots its powers to entry with an entry in F52 in the union list. And the 9-judge bench went on to rule, overriding its 1990 judgment in a synthetic chemicals versus Uttar Pradesh case, saying that the states have the power to tax not just alcohol beverages but also industrial alcohol. Excise duties levied on drinking alcohol is a key component of the revenue of the states, and the top court's ruling that the states have the right to impose, the states have the power on industrial alcohol will only lead to more money in the coffers. Now the key interpretation question before the Supreme Court was whether intoxicating liquor can also be defined as industrial alcohol. Nagaratna was the only judge on the 9-judge bench with a dissenting opinion, and she said that the regulating power for industrial alcohol should be with the centre's control. She was however not against the providing of the state with the powers to regulate industrial alcohol, but only with widening of the definition of alcohol with regard to the state list. The core of the dispute lies from two overlapping entries now in the 7th schedule of the Constitution with the state list and the union list. Entry 8 of the state list gives the states the power to regulate production, manufacturing, possession, transport, purchase and sale of intoxicating liquors, while entry 52 of the union list gives the centre the power to regulate the industries on a whole declared by the parliament by law in public interest. And the centre argued that it had already occupied the field when it comes to industrial alcohol, giving the example of the Industrial Development Regulation Act of 1961, a law passed by the Parliament which deals with non-potable or non-drinkable alcohol included in the industries. The states, on the other hand, said that industrial alcohol can be misused to produce consumable, intoxicating, poisonous alcohol, which is illegal and which required them to enact a legislation, and therefore they need the power on the industrial alcohol. The bench went on to rule that the states have the authority to therefore regulate industrial alcohol, reversing the 1990 decision. And the court set aside the synthetic chemicals versus the state of Uttar Pradesh law, in which intoxicating liquor refers to only potable alcohol, and therefore the states could not tax industrial alcohol. What exactly is industrial alcohol? It is essentially impure alcohol that is used as an industrial solvent, mixing chemicals like benzene, pyridine, gasoline, etc. and ethanol, which is produced by fermenting of grains, fruits and molasses, etc. A process that is called as denaturation turns it into industrial alcohol, and this alcohol is unfit for human consumption and significantly lowers its price. Industries use this impure alcohol to manufacture a range of products from pharmaceuticals, perfumes, cosmetics and also cleaning liquids as well. However, the same industrial solvent is sometimes used to make illicit liquor or cheap liquor, which is dangerous as an intoxicant and whose consumption poses severe risk, including blindness and death as well, so which have been seen in Bihar and Tamil Nadu also. Stubble burning has been caught up now with the Supreme Court. Supreme Court pulled up the centre and the states for not implementing properly the Environmental Protection Act of 1986 and imposing very few fines and not even imposing fines sometimes, keeping in mind the pollution in the capital NCR region and the neighbouring states. The Supreme Court emphasised stubble burning is just not merely a pollution issue, but it violates the fundamental right to life, which includes right to clean and free environment under Article 21 of the Constitution. It slammed the centre for failing to establish strict regulations with regard to addressing stubble burning in the North India, saying that Environment Protection Act has totally become toothless, and it pulled up the state of Punjab and Haryana for not enforcing the law properly and imposing less fines on the individual. The top court then asked the centre to amend the law, that is the Environmental Protection Act, and to increase environmental compensation cess levied on the farmers who indulge in stubble burning, and also officials to fail to take this into account. Now, the 16th BRICS summit was held in Kazan in Russia, and they were speaking about a cross-border payment mechanism. Prime Minister Narendra Modi spoke of integrating the BRICS economies of Russia. What did he mean by so? He said that the payments, the trade should be done between the BRICS countries in local currencies and also common payment gateway. And the BRICS cross-border payment mechanism was in news. It is a proposed system that would allow the member countries to trade with each other using the local currencies and digital currencies. The BRICS Bridge, a multi-sided payment platform that would connect the financial systems of member states using the payment gateways. BRICS Pay, a decentralized cross-border message system that would allow the participants to manage their own nodes and establish currency conversion rates. Local currencies, BRICS is working to increase the use of local currencies and trade between the member countries. India's UPI mechanism is being used, and also India has established local trade in local currencies with Singapore, with UAE, and also discuss the same with Spain as well, and is in discussion with the BRICS countries. Now, the BRICS cross-border payment mechanism would be designed to reduce exposure to the current international financial system, make intra-BRICS trade more attractive, reduce the possibility of clients not buying products due to the lack of payment options, and create trustable ways to transfer money online. And hard to abate sectors were in news recently, where India is now planning to increase the emissions intensity of certain industries, especially the hard to abate sectors. What are hard to abate sectors? It is a term to use to describe industries that have difficulty in reducing the greenhouse gases emissions. These industries are often associated with heavy industries and heavy duty transport and include steel, cement, chemicals, aviation, shipping, heavy road transport, mining, and oil and natural gas. And India is now working to increase the emissions intensity, that is the amount of carbon that can be reduced by these hard to abate industries, at the COP29. And India is close to finding a industry carbon target as well at the COP29 in Baku, that is in Azerbaijan. That is the COP, that is the Conference of Parties to the United Nations Framework Convention on Climate Change. These are some of the issues that I thought I should be discussing with you for October 24th. If you did, please do like, share and subscribe, and don't forget to comment at the end of the video. I shall see you in my next post. Until then, it's very happy learning.